What's going on, my friends? Chris here. I want to bring you all an update today, and what we're going to be looking at is Glassnode, and this is going to be for Bitcoin. I want to look at the Mayer multiple, and what the Mayer multiple is. It says the Mayer multiple is an oscillator calculated as the ratio between price and the 200-day moving average. The 200-day moving average is a widely recognized indicator for establishing macro bull and bear bias. The Mayer multiple therefore represents a measure of distance away from this long-term average price as a tool to gauge overbought and oversold conditions. Following the original analysis, overbought and oversold conditions have historically coincided with Mayer multiple values of 2.4 to the top line and 0.8 respectively at the lower areas. These multiples are then applied to the 200-day moving average to establish cycle tops and cycle bottoms pricing models. So what I want to do here, guys, I don't have a crystal ball. Y'all don't have a crystal ball. We've been in a downtrend now for roughly about 80 days. And everybody's looking and they're saying, is this going to be a bear market like we had in 2018, which I've lived through, guys, and I learned so much from it. And to me, this just seems different where we're at now than what we had back then. And I believe that this could be a little bit more of a shorter term to a medium term bear market that we've been dealing with. So obviously, if we're trading below our 200-day moving average, guys, that's going to show a more bearish bias. But what this indicator is going to do here is show that we potentially could be overextended to the downside, and there's been too much fear, because many times, like we saw in 2017, we had that euphoric blow off top. We didn't really get that. So if you don't have a euphoric blow off top, then maybe we're not going to have such a fearful bear market. Maybe this is going to be something that we're in it for a while longer, and then we're going to be able to break out and break through of it. And it could be something back like we had in May when we lost 62%. It was 80 days, somewhere right in that range, 80, 90 days. And then we got moving again to the upside. So I was a person who adhered to the 4-year market cycle. That has been broken, and I wanted to stick with that until I saw that it was broken. And now that it is broken, it seems like that these market cycles have changed, that we're having these big, 40 to 60% corrections, and then we end up marching higher. So this isn't a guarantee, but what we're looking at here is to show how low we actually are on this Mayer multiple, which is going to show us how far away we are from the 200-day moving average. And maybe we could get one of those reactions in Bitcoin all the way back up, to the 0.618. If you're measuring from the top to the bottom, see if we can get a bounce back to the 0.618, the 0.5, which would take you back, maybe to $50,000 or so. That'd still be a really nice move for Bitcoin. So we're looking to see if we can get that nice reaction back to some of these higher levels. So when we're taking a look at the Mayer multiple, guys, obviously we're having diminishing market cycles, so we do have to keep an eye on that. But look at where we're at in terms of the score right now. We're down here in the green. We actually just went underneath, and I'm going to zoom in for y'all, but we just went underneath the green now. So when people are saying, this is the time to panic sell, I don't think that's the way to go, and this isn't financial advice. If you're stuck in positions or whatnot, I just don't think panic selling down at these areas when we've already had so much fear is the way to go. I think if anything, not financial advice, dollar cost average in at these good levels, be patient and wait for us to continue to move higher, because you can see in the overall here, take a look at price, guys, it's just continuously moving up. And with inflation how it is, I know we're a risk on asset now, but as we grow, I do believe that people are going to want something, like Bitcoin or Ethereum, whatnot, that's going to actually have some value, as opposed to the US dollar that's not backed by anything. So I want to continue on here, guys, but if you get some from this, don't forget to like, subscribe, hit that notification bell. It really helps us out a lot. I want to try to keep you on the right side of this market. I told you for my Ethereum position, I was buying the fear, so I'm still looking at that as a longer term swing trade position. I'm still in that position now, patiently waiting to see. But I am aware that we still could have another big leg to the downside, and we could test those $30,000 or even lower. And I'm prepared for that. I'm not overexposed for that. And that's an important thing as well, guys. You never want to go all in on one position, okay? That's a huge deal. Save your capital, do limit orders, limit buy orders at certain positions. That's what's going to help you the most. That's what I found to help me. But when we zoom in and we take a look at this here, okay? We're going to zoom in even more. So we're back to the place we were back in May when we had this gnarly 62 or 60% loss, guys. We went down below the green, we back tested it, and then we went even farther down in the green, and then we had our reversal, and we made it back all the way up to 68,000 or so. Okay, so now what you can see is this correction has been that nasty for us that we've actually dropped down. So I'll zoom in a little bit more. Drop down through the green. We're back testing now, so we may go lower, but you can see the level we're at. If you're going to be selling your coins, you want to be selling when we're above this pink line, or at least somewhere close to it. You don't want to be selling when we're way down here in the green and something that's going to be measuring our 200-day moving average, which is huge in this space. Okay, it marks those bull and bear markets. When you get back up above it, everybody's going to be bullish. When you drop down below it and you back test, everybody's going to be bearish. Okay, and one last thing I wanted to leave you with, I think this is important, and I've been reading here, guys, spending some time in its Technical Analysis of Stock Trends. It's the 7th edition by Robert D. Edwards, and they're talking about the bear markets and here how bear markets start. Primary downtrends are also usually, but again, not invariably, characterized by 3 phases. The first phase is the distribution period, which really starts in the later stages of the preceding bull market. So that's when we were seeing, guys, back up in here, this complex head and shoulders pattern. There's a lot of distribution that was taking place down or up in that area. So that was something that we wanted to watch. And then you could see down here in 30,000, we had a lot of accumulation. And then back up here, 68 distribution. Now we're trying to have that accumulation down at these lower levels. But I want you to kind of tell me which phase you think we're in here. We're going to go through the first, the second, and the third of the bear market. So the first, we talked about the distribution period, which really starts in the later stage of the preceding bull market. During this phase, far-sighted investors sense the fact that business earnings have reached an abnormal height and unload their holdings at an increased pace. Trading volume is still high, though tending to diminish on rallies, and the public is still active but beginning to show signs of frustration as hope for profits fade away. The second phase is the panic phase. Buyers begin to thin out and sellers become more urgent. The downtrend of prices suddenly accelerates into an almost vertical drop, while volume mounts to climatic proportions. After the panic phase, which usually runs too far relative to the existing business conditions, there may be a fairly long secondary recovery or sideways movement, and then the third phase begins. This is characterized by discouraged selling on the part of those investors who held on through the panic or perhaps bought during it because stocks looked cheap in comparison with prices which had already ruled a few months earlier. The business news now begins to deteriorate as the third phase proceeds. The downward movement is less rapid but is maintained by more and more distressed selling from those who have to raise cash for other needs. The cats and dogs may lose practically all their previous bull advances in the first 2 phases. Better grade stocks decline more gradually because their owners cling to them to the very last. In the final stage of the bear market, in consequence, is frequently concentrated in such issues. The bear market ends when everything in the way of possible bad news and worse to be expected has been discounted, and it is usually over before all the bad news is out. The 3 phases of the bear market described in the preceding paragraph are not the same as those named by others who have discussed the topic. So what he's saying, guys, it's all going to be variables, but you're always going to have these cyclical cycles that repeat themselves. And that's kind of what I want you to put down low. What phase do you think we're in here? Because it looks like we're going through these like mini bull markets, and then we're going to have like mini bear markets, mini bull markets, mini bear markets. You know, we're just going to have to take price action as it is. But I just want to put that stuff out there for you. And I've lived through all of it. I've seen an entire market cycle, the whole bear market in the beginning, where it's just crazy. You're having these huge drops, and we're having reactions back over 100%, and then we're getting slammed again to the third phase where you just think there's going to be a reversal, and it just keeps grinding lower and lower and lower and lower, and you think it's never going to end. So I've felt it all, guys. I just want to bring you some hope here, you know, just to sit back, relax, take some time, and really do the things that you enjoy. Hope you like this. Take care.